Chile's economy is often hailed as a model of success, with its thriving copper industry and business-friendly policies setting it apart in South America. But behind the headlines of economic growth lies a deeper question. At what cost? Despite impressive GDP figures, Chile faces mounting inequality, an over-reliance on global markets, and growing discontent among its citizens. Today, we're diving into the heart of Chile's economic story to uncover how privatization and resource dependency shaped its fortunes and its challenges. In this video, we'll explore the rise of Chile's neoliberal reforms, the impact of its dominance in copper exports, and the growing pressures from inequality and global shifts. Was Chile's economic transformation a true success story or a short-sighted gamble that sold its future to the highest bidder? We'll also look at what lies ahead for one of South America's most complex economies and what lessons the rest of the world can learn from its experience. Stick around as we uncover the truth behind Chile's economic rise, and don't miss the valuable insights we've got in store. Like, share, and subscribe to Economy Explorer for more content that makes the world of economics accessible and engaging. The rise of privatization. In the early 1970s, Chile stood at a crossroads. The country faced economic stagnation, soaring inflation, and deep social unrest. Amid this turmoil, a group of U.S.-trained economists, famously known as the Chicago Boys, proposed a radical solution: transform Chile into a free market powerhouse. Their vision? To dismantle state control over industries, open the economy to global markets, and create a business environment free from excessive government interference. This marked the beginning of one of the most sweeping privatization efforts the world had ever seen. Under their guidance, entire sectors of Chile's economy were sold off to private interests. Steel plants, telecommunications, electricity grids, and even the nation's pension system were no longer in the hands of the state. The logic was simple. Privatized companies driven by profit would operate more efficiently than state-run enterprises. And initially, it seemed to work. Foreign investors flooded in, jobs were created, and Chile's economy began to grow. By the late 1980s, the country was being hailed as an economic miracle. But was this transformation as miraculous as it seemed? For many, privatization came at a cost. Essential services like healthcare and education became more expensive and inaccessible to large segments of the population. Wealth concentrated in the hands of a few, and inequality grew at an alarming rate. Critics argued that the country's newfound prosperity was only skin-deep, benefiting corporations and elites while leaving millions behind. Even today, echoes of this controversial period can be felt in the stark divide between Chile's rich and poor. Chile's economic reforms during this era were groundbreaking, but they were only the beginning. As the economy began leaning heavily on one resource, copper, it became clear that this experiment in neoliberalism was far from over. What happens when a nation ties its fate to a single commodity? That's the next part of this story. The copper economy. If there's one resource that defines Chile's economic story, it's copper. Known as Chile's salary, this precious metal has been the backbone of the nation's economy for decades. But how did copper become such a central pillar of Chile's prosperity, and what risks does this reliance pose? Chile holds the largest copper reserves in the world, controlling over 1/3 of global exports. The country's mining boom began in the early 20th century, but it wasn't until the 1970s that copper truly became a cornerstone of the economy. As the Chicago Boys opened the market to foreign investors, multinational mining companies poured in, drawn by Chile's rich deposits and business-friendly policies. Copper's soaring demand in industries like construction, electronics, and renewable energy meant that Chile's economy was riding a wave of global growth. Today, copper accounts for nearly 10% of Chile's GDP and a significant portion of its export revenues. But this reliance comes with strings attached. Copper prices are notoriously volatile, dictated by global market forces far beyond Chile's control. A drop in prices can ripple through the economy, stalling growth, shrinking revenues, and forcing budget cuts. For example, during the 2015 commodity slump, Chile's economy struggled to maintain its momentum, exposing the vulnerabilities of depending so heavily on a single resource. Additionally, the environmental and social costs of mining cannot be ignored. Communities near mining sites have long grappled with water scarcity, pollution, and displacement, creating friction between local populations and the government. These challenges raise an uncomfortable question. Can Chile sustain its copper dominance without sacrificing its people and environment? As Chile's economy leans on copper, a new resource has begun to emerge in its economic narrative, one that could shape the country's future. But will it be enough to break the cycle of dependency? That's the focus of what's next. Current economic challenges. Chile's economy, once a shining example of growth and stability, is now at a crossroads. Despite its celebrated GDP and global copper dominance, cracks in the foundation have begun to show. Inflation, inequality, and external pressures are reshaping the economic landscape, forcing the country to confront hard truths. One of the most pressing challenges is persistent inflation. For years, Chile's central bank maintained an enviable inflation target of 3%. But global disruptions, including supply chain issues and fluctuating commodity prices, have pushed inflation beyond control. Everyday goods are becoming more expensive, squeezing middle and lower-income households who already struggle to make ends meet. These rising costs are a constant reminder of the uneven economic benefits enjoyed by the elite compared to the average citizen. Then there's the issue of economic inequality. While Chile boasts the highest GDP per capita in South America, this figure masks a stark reality. Wealth is concentrated in the hands of a few. Half of the workforce earns less than $6,320 annually, while the wealthiest 20% control over 50% of national income. This disparity has fueled social unrest, with massive protests in recent years calling for systemic reforms in healthcare, pensions, and education. Externally, Chile's reliance on copper makes it vulnerable to global market fluctuations. As copper prices dropped during the pandemic, the nation's revenues took a sharp hit, exposing its economic fragility. The pressure to diversify is mounting, but progress has been slow. Although the lithium industry shows promise, heavy reliance on mining as a whole limits Chile's ability to weather future crises. The stakes are high. Chile's ability to navigate these challenges will define its economic future, but can it find a balance between growth and equality? Up next, we'll explore what lies ahead for Chile and its efforts to break free from resource dependency. Diversification and the road ahead. Chile's reliance on copper has long been its economic lifeline, but as global markets shift, the question becomes, what happens when a lifeline becomes a limitation? Diversifying its economy is no longer just a strategy for Chile. It's a necessity. The country's leaders are now racing to harness new opportunities while navigating the pitfalls of resource dependency. One promising frontier is lithium, often referred to as white gold. With the global transition to renewable energy and electric vehicles accelerating, demand for lithium, a key component in batteries, is soaring. Chile, home to some of the world's richest lithium reserves, is uniquely positioned to capitalize on this boom. However, unlike the open-door policies of the copper industry, Chile is taking a more cautious approach. recent initiatives have granted the state a controlling stake in major lithium projects, aiming to ensure that profits are reinvested into national development rather than flowing exclusively to foreign corporations. This marks a significant shift in strategy, but will it be enough to avoid the same pitfalls that plagued copper? Beyond lithium, Chile is exploring growth in other sectors. Agriculture, particularly high-value exports like wine and fruits, has gained traction as a driver of economic diversification. Similarly, the service sector, which already accounts for over half of the country's GDP, presents untapped potential for expansion. Investments in technology and tourism are also being discussed as ways to broaden Chile's economic base. Yet, diversification isn't just about developing new industries, it's about creating resilience. To truly future-proof its economy, Chile must address deep structural issues. Greater investment in education and infrastructure will be critical to equipping its workforce for the demands of a modern, knowledge-driven economy. Social programs that reduce inequality and improve living standards will not only stabilize the country politically, but also unlock the full potential of its population. As Chile stands at this pivotal juncture, the stakes are higher than ever. Its journey toward diversification offers lessons for resource-dependent economies worldwide. Can it strike the delicate balance between growth, sustainability, and equity? That remains the ultimate challenge. Lessons from Chile's economic evolution. Chile's journey from a struggling economy to a global player in copper and lithium is nothing short of remarkable, but it's also a cautionary tale. For decades, the country leaned on the shiny promise of resource wealth, building an economy dependent on factors beyond its control. This reliance brought prosperity for some, but for others it deepened divides and left lingering questions about sustainability. What happens to a nation when the resources that built it are no longer enough to sustain it? As we've explored, Chile's bold economic experiments shaped its modern identity. Privatization revolutionized industries but widened the gap between rich and poor. The copper boom put Chile on the global map but tethered it to a volatile market. Now, as lithium emerges as the resource of tomorrow, Chile faces a critical choice. Will it use this new opportunity to chart a more inclusive, diversified future? Or will it repeat the same patterns, risking instability and inequality yet again? Chile's challenges are not just its own. They reflect a universal struggle for resource-rich nations, how to balance growth, sustainability, and equity. For viewers, these lessons resonate far beyond Chile's borders. Think about your own country or community. Are there parallels in the way resources are managed or how growth is prioritized over people? Let us know in the comments how this story relates to you. Chile's economic future remains unwritten, but its story so far is a compelling blend of ambition, resilience, and risk. Thank you for joining us on this exploration of Chile's economy. If you enjoyed this video, like, share, and subscribe to Economy Explorer to keep learning about the forces shaping our world. And don't go anywhere. Check out one of the suggested videos on your screen for more insights. Thanks for being part of Economy Explorer.